Good morning, ladies and gentlemen, and welcome to the Harmony Gold H1 FY26 results media call. All telephone line participants will be in listen-only mode. If you'd like to ask a question, please key in star and then 1 on your telephone keypad. You may key in star and then 2 to leave the question queue. If you should need assistance during the call, please signal an operator by keying in star and then 0. Please note that this event is being recorded. I will now hand you over to the CEO, Beyers Nel. Please go ahead, sir.
Good morning, and thank you for joining us for Harmony's results for the 6 months ended 31 December 2025. During the period under review, we reinforced Harmony's position as a higher quality, lower risk global producer of copper and gold. We continue to grow selectively, sequentially, and affordably, turning today's gold price tailwinds into durable compounding value. Our first rand or dollar spent goes to safety and sustaining our operations. We then allocate to organic projects and advance copper and gold scale only where risk-adjusted returns clear our hurdles. Every initiative competes on risk, margin, and cash conversion. We continue preserving balance sheet strength for disciplines and consistent through the cycle dividends. Operationally, we remain on track to meet our full year production cost and grade guidance. An exceptional gold price environment has further supported another strong financial performance. As a result of our strengthened cash flow generation, we are pleased to announce that we have revised our dividend policy to provide shareholders with enhanced upside participation. The revised policy now includes a base dividend and an upside participation model based on pre-dividend net debt to EBITDA levels. In line with our new dividend policy, we have declared an interim dividend of 530 South African cents or $0.32 per share at a rolling 12-month dividend yield of 2.2%. The interim dividend payout has doubled to a record 3.4 billion rand or $204 million. This represents a payout of 43% of net free cash. Looking ahead to our FY26 guidance. For our gold operations, we reiterate our previous guidance of production of between 1.4 and 1.5 million ounces, underground recovered grades above 5.8 grams per ton, and all-in sustaining costs between 1.15 and 1.22 million rand a kilogram. Our copper production guidance only includes the CSA mine. Guidance for the financial year 26 is as follows: production of between 17.5 and 18,500 tons, C1 cash costs of between $265 per pound and $280 per pound, and recovered grades above 3.5%. Group CapEx for financial year 26 has been updated to 18.5 billion rand and now include capital expenditure for CSA and Eva. Updated CapEx for gold operations have reduced by 1 billion rand to 11.8 billion rand. CSA CapEx guided at 1.1 billion rand or $65 million. Eva Copper CapEx is projected to come in at 5.6 billion rand or around $302 million this financial year. Project capital for Eva Copper is expected to be between 1.55 and 1.75 billion over the 3-year construction period, with an estimated 20-40-40 split over the 3-year period. We will rather provide longer term guidance for the CSA mine at the time of our full year results release. Thank you, and we will now take any questions.
Thank you, sir. Ladies and gentlemen, if you'd like to ask a question, please key in star and then 1 on your telephone keypad. A confirmation tone will indicate that your line is in the question queue. You may key in star and then 2 to leave the question queue. Just a further reminder, if you'd like to ask a question, you're welcome to key in star and then 1. Our first question comes from David McKay of Mining MX. Please go ahead.
Morning, Bears and team. I hope you're all well. Thanks for the call. I just wanted to get some feedback just in terms of input cost inflation, whether you're seeing any of that, especially on items like sulfuric acid, if applicable, diesel, and then also whether the cyanide shortage has been resolved or if you're still struggling on that front.
Good morning, David. I will start with the latter. The cyanide supply has normalized. It was an industry-wide force majeure issued by the cyanide supplier. As I said, that has normalized now. We are also reducing our reliance on external party supply of liquid cyanide by increasing our cyanide dissolution capacity in Harmony, where one can dissolve briquettes to reduce your dependency on a sole supplier. So we're not 100% there yet, but we're working on contingency measures to make sure that we do not have an impact like this again. On the inflationary side, obviously Brent crude spiked with what's going on in the world right now. Just a reminder that the South African costs is quite predictable in the sense that 55% of our cost basket in South Africa, which is still 90% or so of our production, is labour, and that 55% is governed by our 5-year wage agreement. So that cost inflation number is pegged. And then on top of that, if you add water and electricity, you get to more than 70% of the cost basket, being quite predictable. We don't use diesel as our main fuel source on all of our operations. Our labour-intensive underground operations are not the typical open pit operations that run on diesel machines. So, on a relative basis, albeit that we've got Hidden Valley, Kalgold, Target, and now the CSA mine in Australia and the Eva Copper development that do run more on diesel, the exposure on the whole portfolio is somewhat muted because of the energy source being different on the labour-intensive underground mines.
Okay, thank you. And then just squeeze a quick question on CSA Copper. Annualized that production looks to be about 27,000 tonnes, which is below. Well, in the past I've been reporting, nameplate capacity on this mine of about 41,000 tonnes. Just if you could explain the discrepancy there, if there is one. And then just also whether you can give any guidance on any increases in capex on the CSA as you recapitalise and pull that asset towards itself.
Sure, David. I want to start by saying that we are very happy with the ore body that we bought in CSA. It's a phenomenal copper ore body, and we continue to be very much excited about that. And you'll see in the presentation later today that some phenomenal drill intercepts that sit outside of the current mine shell has also come through. So, as to the quality of the mine and what we've bought, we are very happy with that. What is important to understand about the guidance that we've given is it incorporates a number of one-off stoppages that we did. One for safety. We had a 7-day safety stoppage in this period where we addressed some secondary egress systems, upgrading that, making sure that's safe in the event of an emergency for people to egress the mine. And secondly, in the guidance we've given out today on the third quarter, there's a 30-day, the whole month, where we're stopping the operation to complete steelwork in the shaft that needs to be rehabilitated and replaced in terms of making sure that the shaft system is 100% safe. So normalized for that, the production is lower than, I guess, what was previously guided by the other operator. But, we're confident with what we've got there in terms of setting CSA up for the long term, in terms of decongesting the ventilation, making sure that any out of sequence mining is to standard, and making sure that the CSA mine is a long-term value add for Harmony.
Thanks, Beyers. Thanks. I can come back with any other questions later on, if possible.
David.
Thank you, David. You're welcome to rejoin the question queue. Our next question comes from Martin Creamer of Mining Weekly. Please go ahead.
Good morning, Beyers and team. Well done. Good work. Just looking at this gold production being down, what was that about? And is this a new level that you'll sort of sink to permanently, or is it just an anomaly? And then, is there much room to grow quickly with gold in South Africa? Brownfield extension, near production, that sort of thing. Can you give me some sort of insight into what is possible along the brownfield lines and the quick growth gold lines?
Good morning, Martin. Thank you. Martin, our production was down for this period, basically on the back of two or three things. One, I'll start with Hidden Valley. Hidden Valley suffered a tectonic-related mill motor failure in the gold plant. So there was a earthquake in country, and there was some vibrations coming through which damaged some of the civils in a portion of the plant. I mean, that's resolved now. As a result of that, we've also had some gold shipping delays at Hidden Valley, which flowed over to the next reporting period. So, I mean, that would be one-off of nature, and I mean, we're back to good momentum at Hidden Valley. The South African operations were affected by this force majeure on the cyanide supply we just spoke about with David, and that resulted in some impacts on our recoveries in our plants and more so on our surface operations where we consume a whole lot of sodium cyanide in the extraction process of gold. Other areas, we had some lower grades during this period in total, and that was also affected by some metallurgical plant recoveries, which were a little bit lower than what we anticipated and expected. And we're glad to report that those recoveries in the plants have almost always also normalized now in quarter three. So not structural in nature, more one-off, and looking forward to obviously the good momentum of the operations at the moment. Martin, as to the conversion of further gold in South Africa, we've got an exciting organic pipeline. I mean, we sit on a huge mineral reserve and a huge mineral resource, and that resource to reserve conversion has always been part of the Harmony story. So our gold organic projects are advancing. We're working on further opportunities to perhaps add more surface remining to our portfolio in South Africa. Those are under study, and we will disclose the outcome of that to the market once we're ready.
Thanks, Beyers.
Ladies and gentlemen, just a further reminder, if you'd like to ask a question, you're welcome to key in star and then 1 to place yourself in the question queue. We have a follow-up question from David McKay of Mining MX. Please go ahead.
Thank you. Yeah, just wanted to follow up on the silver price. Do you still have a lot of exposure via your book to the silver price? And, is there any way you can do to mitigate that? Anything you can do to mitigate that situation?
Yeah, David, thank you. As you know, we produce quite a bit of silver at our Hidden Valley mine. And, the phenomenal growth we saw in the silver price during the period have obviously resulted in the outcome as published. So silver revenue decreased by 27% to 740 million from 1 billion in the previous period due to a 52% reduction in Hidden Valley silver production, firstly, because of the mill motor impact. And that was obviously offset, by the prices as well. So I'll ask Boipelo to maybe just add on the silver and what we can do. But it basically, I guess, David, is what it is. And, we need to focus on what we can control, and the prices that are fixed on those contracts are fixed.
Yeah, David, just to add, we do hedge silver, but you'll notice in the hedging table that we publish in our results, that we haven't added on those hedges at the moment, just given where price levels are. So there is included in the financials a loss on those silver derivatives. But yeah, it's fairly limited and limited to Hidden Valley.
Well, Perlo, just while I've got you on the phone there, can I ask you, I see that the company is now in a net debt situation. Is that, I assume that's not post-dividend. When do you expect to get back into a net cash, and how do you expect to manage that, your cash, going forward?
So at current levels, we expect to be back at net cash by the end of this financial year. And I mean, that was notwithstanding the fact that we paid the $1 billion for CSA. I mean, in terms of how we manage that, we've always adopted a disciplined approach towards capital allocation. So it's a balance between, firstly, investing in sustaining our business, safety always as a first priority, and then the balance between sharing with shareholders, as you can see with the revised dividend policy. So it remains a balance, David, as we navigate, obviously, integration of CSA as well as the build on Eva.
And then I see there's a comment where you say you're actively still discussing, might not be the right word, but evaluating the optimal capital structure. I always thought that was just a reference to the payout policy, but if you're still assessing your capital structure, what else could that refer to?
So if you'll note in our balance sheet, we have quite a bit of debt sitting under current liabilities, and that's due to the bridge loan that we took out to pay for the CSA asset. So we would have to look at ways in which we take that bridge loan out. I think we did indicate that to the market when we came out with CSA and how we intend to fund that.
What typically are the options there?
It could be a number of things, David. I mean, I can't say at the moment. I mean, it's fair to say if you look in our financials, we also have just debt which is maturing shortly. So we will be refinancing those. So it could be a number of things, but it will come to the market when those plans have been finalized.
Okay, thanks so much. Just one final question. I mean, do you expect now a very generous re-rate from the market now you've adjusted your payout policy?
Yeah, David, we're just happy that we can share some of the upside of the current tailwinds we have in gold. We're equally excited about building our copper portfolio and making sure that we create a portfolio that will not only reward shareholders and stakeholders now, but even through the cycle with copper coming in.
Oh, can I just ask also, just on the copper side, what do you expect what are you budgeting, if you can share, just in terms of the contribution from copper for the remainder of the financial year?
Contribution from copper in terms of, sorry, David,
cash,
if you
sorry.
can just clarify.
Yeah, in terms of cash generation, yeah.
I cannot guide that. So we've guided the production and the C1 cost. Yeah, so I think you can pretty much work it out.
Okay, thank you. Thanks so much, guys.
Thanks, David.
Our next question comes from Dineo Faku of Sunday Times. Please go ahead.
Hello?
Dineo?
Yes. Hello, can you hear me?
Yes. Can you hear you?
You can hear me?
And Dineo, your line is open. You can ask your question.
Yes, thank you. Thank you so much for that. And good morning, everyone. The question that I have is about Eva mine. I just wanted for us to just get an update. If I missed it, what plans you have there for the Eva mine? And secondly, it seems like a lot of gold mining companies are buying assets in Australia. Just from your side, tell us why you've gone to Australia, opportunities that you further see in that country. And then the other question that I have is, seeing that the gold price is so high, are there more incidents of illegal mining? Because we've seen even there's a move by the government to address it through a deployment of soldiers. Thank you.
Good morning, Danao. Starting with Eva, we are extremely excited about this project. We have announced final investment decision to the market November last year in 2025. Since then, it's been a beehive of activity, and we have completed most early works and then have ramped up to full construction at the moment. We look forward to our first production towards the end of calendar year 2028, and we've guided the CapEx to be over a 3-year period, to be between 1.55 and 1.75 billion over that 3-year period. So everything according to plan at this point in time. And as I said, a good jurisdiction to build a copper mine in, and we are quite excited to take that through the EPC and the construction of the concentrator and building the mine. As to Australia, Australia was for a long time part of our filters. And just a reminder to the market, we have been operating our regional hub in Australia for more than 20 years now. We support our Papua New Guinean operations through a hub in Brisbane. So it was always a natural extension of our capability in country to consider the Southeast Asia region, if you will, and Australia is a key part of that. We've got a healthy mix of Australians and South Africans and people in the office there. So we believe this is not a new entry into Australia for Harmony. We've been there for a long time, and we feel we've got a good understanding and good capability in country to leverage in terms of adding production. And we're quite excited to invest in Australia. As to gold and illegal mining, yes, true. If the price of any commodity goes up, there is often an increase in illicit activity. And we do see some of that coming through, albeit we don't suffer any impact or major impacts on our operations. We believe it is an issue, but it is well controlled, and we believe we've developed over the years some sort of blueprint, particularly in the Free State, where we could get some good cooperation from the South African Police Service in combating these illegal activities.
Thank you.
Thank you.
Okay.
Sorry, Danao, did you have another question?
No, thank you.
Thank you very much. We have a follow-up question from...
Sorry.
Please go ahead.
To add to Danao's question on the Eva copper, we've actually got a video which we'll be publishing on our website and putting through on social media. So if you do want to go and have a look at that, it will give you some additional information on Eva. Quite exciting.
Thank you, sir. We have a follow-up question from Martin Creamer of Mining Weekly. Please go ahead.
Thank you. You refer to your gold production as being high-quality gold production. Could you just give me some insight into the expected grade levels and whether these will be going up and down at any stage, or you'll be able to continue to refer to yourselves as high-quality gold producers?
So Martin, if I start with our 4 quadrants in our business, I would start with the high-grade underground operations. Those are 2 mines. These are the mines we acquired, the last 2 remaining AngloGold Ashanti assets in South Africa, which are Moa, Kutsong, and Mponeng mines. These mines produce 7.8 tons of gold at 8.86 grams per ton. Now, these are the mines that, when we acquired them, had a relatively short life to them. And these are the mines that are now on an organic level being extended. They will have a 20-year life. We are referring to these high-grade mines that are performing so well with the recapitalization projects that Harmony has initiated and commenced since acquisition, will have tenure. They will have a long life ahead of them, and those are high quality. And when we say high quality, good quality, we mean high grade with good margins ahead of them. Similarly, in South Africa, we also have what we call the second quadrant, is the South African surface operations, which we call, albeit maybe not high grade, but high margin surface. This is the re-mining operations, which produce 3.5 tons of gold at 0.17 grams per ton. Now, those from an all-in sustaining cost perspective and a cash generation potential perspective are high margin operations which add to the quality. It is our optimized assets during this cycle, which is the lower quality assets at 4.3 grams a ton. Albeit these mines have doubled their margins in the reporting period and are generating cash. I mean, these are the mines that are shorter in life of mine going forward. As these higher cost mines, lower grade mines mine out, and we maintain the high grade and build the high grade production out for the 20 years, as I said, and add the high margin surface production, that's the high margin, high quality gold base we're talking about that's going to be around for the future in Harmony Mines.
Thanks for that comprehensive insight there. Thank you.
Thank you. Ladies and gentlemen, just a final reminder, if you'd like to ask a question, you're welcome to key in star and then 1. It appears we have no further questions in the question queue. I will now hand back for closing remarks.
In closing, we are intentionally transitioning into a significant global gold and copper producer. This journey is grounded in mining with purpose, ensuring that everything we do creates value for all stakeholders wherever we operate. Thank you very much.
Thank you, sir. Ladies and gentlemen, that concludes today's event. Thank you for joining us, and you may now disconnect your lines.